Good afternoon, or should I say, buenos dias, my Forex savages. Today I'm just going to talk about market structure. And so market structure is a big thing in the markets. So market structure technically refers to the way the graph moves. So if you look here, let me give you an example, or show you an example. Do you see the graph? You see how it moves up, down, and then technically it moves it moves up, and it goes sideways, or it moves down. So usually moves in the Forex markets are what we consider market structure. And there's always, let me get my pen, there's always market structure going up, which is creating what we call higher highs and higher lows, and that's for up. So it would be a higher high, and then a higher low, and then a higher high, and then a higher low, and then a higher high, and then a higher low, and then higher high, and it just keeps going like that. So just keep going like this, and then that would be market structure. And usually, as us traders, we like to get into these points because the main thing is buy low, sell high. So these what we call retracements, and this is where we get into the market. If the market structure is up, this is where we buy. Let me see, where's the pencil at? Mi lapicero. ¿Dónde está mi lapicero? Well, technically, yeah, we just get into the markets in these zones right here. So you get into this zone, right here. This is where we buy, and this right here. So it starts off from here, and then it goes to a higher high, a higher low, a higher high, a higher low, and then a higher high, and then a higher low, and then a higher high. And then the reason why it's called a higher high, it's because it's higher than the previous high. So then this one right here, a higher low, it's previous than the previous low. And then right here, look, higher high, it's higher than the previous, higher high. So that's called higher high because it's higher than this high. And then this one's called a higher low because it's higher than the last low, which was this one. And then let's see, for market structure going down, it would be a lower low, and then a lower high, and then a lower low, and then a lower high, and then a lower low, and then a lower high, and then a lower low. And then that would be market structure for downside market for sales. And then the sells, you usually want to get into around these zones right here, around these zones, because buy low, sell high. And then right here, this is where you go your lower low, and then the lower high, and then it's a lower low because it's lower than your previous low, and then the lower high because it's lower than your previous high, and then a lower low because it's lower than this previous low, and then a lower high because it's lower than this previous high, and then a lower low. And then that's pretty much market structure in the Forex markets for you guys. And a lot of the times you see it. And then also there's also market structure like this, sideways, like that, sideways, and then you'll have a zone here and then another zone here, and then we'll talk about resistance and support in another video. But yeah, you have market structure like this, and usually it'll build like market structure up like to that, and then it would build it down like this to the zone, and up like that, and then down to the zone like that, to give you a better picture of how the consolidation would work there in that zone. And yeah, just comment, like, and subscribe for more videos, and that's pretty much it for today of the market structure.